Coming up on Arirang News, South Korea reports 47 new cases of the coronavirus. The second day in a row, the number's been under 50. The authorities are still urging caution, though, and people are asked to stay at home. South Korea posts a current account surplus for February, and in fact, it was bigger than a year earlier. Exports were up despite the coronavirus pandemic. And tech giants Samsung and LG beat market expectations with their first quarter profits. No breakdown of the numbers yet, but for Samsung, it seems to be from strength in its chip business and LG, its home appliances. It's 5 p.m. here in Seoul. Thanks for joining us on Arirang News. I'm Devin Whiting. South Korea on Tuesday confirmed 47 new cases of the coronavirus, the second day in a row that there have been fewer than 50. The overall total number of cases, including those who recovered, now stands at 10,331. Of the new ones, 13 were in the southeastern city of Daegu and 10 in Gyeonggi-do province. There were also 14 imported cases. South Korea also reported 8 more deaths, bringing the death toll to 194. 96 more people were discharged from hospital after making full recoveries. The total number of people who've recovered now stands at 6,694. The Seoul metropolitan government has started using a new artificial intelligence system to make phone calls to people in self-quarantine so they can be monitored more effectively. Using a cloud-based AI, the city's 120 Dasan call center will be contacting some 2,000 people who don't have the self-quarantine app on their smartphone. Those people either don't have a smartphone or were not required to download the app at the time they entered Korea. The AI asks about their health and whether they have symptoms and sends data to the city's health officials. It also gives instructions based on the person's response. The system can make calls in Korean, English, and Chinese. On April 15th, next Wednesday, millions of South Koreans will be voting in a nationwide general election. They'll be choosing representatives to serve in the National Assembly for the next 4 years. The coronavirus is a concern, of course, for an event of this size, but Koreans are eager to make their voices heard. Our Kim Bo-kyung went to talk to some voters and see what it is they want.
Many Korean citizens have stressed that a new National Assembly would need to work on certain economic measures following the COVID-19 outbreak.
We need economic measures that could help the self-employed who are almost in bankruptcy and those who are on the brink of being out of work. Preventive measures against the pandemic, such as having an independent body that takes care of people's health, are also needed.
Of course, COVID-19 made things worse, but I believe retailers had been having a hard time even before the outbreak. I hope those elected can find ways for the poor to have a better quality of life.
Some believe that South Korea could find ways to boost the economy if parties can overcome ideological differences.
Instead of fighting over ideology, I hope those elected this time could prioritize the economy. I believe the COVID-19 outbreak might be a chance for South Korea to start the third Korean wave in the pharmaceutical and biotechnological sectors if ruling and opposition parties work together.
Citizens also demanded policies for the youth.
Policies that are actually helpful for people are needed amid the COVID-19 outbreak, especially for employment, loans, and house leasing for young people.
I'm currently looking for a job, so I hope there will be more jobs for young people.
Some wanted politicians to really look into each district's particular issues and come up with solutions.
Those elected are representatives of each district, so I believe they need to come up with helpful policies that could actually tackle the issues in their district.
In the upcoming general elections, people seem to be looking for candidates who have answers to the current economic challenges and who can find ways to help those citizens who are suffering. Kim Bo-kyung, Arirang News.
The International Monetary Fund says the coronavirus pandemic has hit the American economy with unprecedented speed and severity. And for the world as a whole, the Asian Development Bank predicts it could cost an eye-watering 5% of global GDP. Lee Seung-jae reports.
The COVID-19 pandemic has taken a wrecking ball to the world economy, especially the United States, which has seen over 350,000 confirmed cases and over 10,000 deaths as of Monday. According to a blog published by top IMF economists on Monday, the U.S. economy is experiencing the consequences with unprecedented speed and severity, adding that nearly 10 million Americans applied for unemployment benefits in the last 2 weeks of March. The economist added that the number is a sharper increase than even during the peak of the 2008 global financial crisis. The IMF also cited limited but encouraging signs of recovery in China, but said it could not rule out a resurgence of the pandemic in the country. Daily satellite data on nitrogen dioxide concentrations in the atmosphere, a proxy for industrial and transport activity, shows that there's a gradual decline in containment measures and a resumption of economic activity. Meanwhile, according to the Asian Development Bank last Friday, the cost of the pandemic could be as high as $4.1 trillion, or nearly 5% of global GDP, depending on the virus's spread through the US, Europe, and other major economies. It added a shorter containment period could limit the damage to $2 trillion. The new estimate takes into account the immediate impact on tourism, consumption, and investment. In early March, the ADB predicted the virus outbreak could cost the world economy $347 billion. But latest figures come as the epicenter of the virus shifted from China to Europe and the US, with the number of global infections surpassing 1.3 million. Lee Seung-jae, Arirang News.
On the trade front, South Korea posted a current account surplus in February, and it was bigger than a year earlier, despite the coronavirus pandemic. Data from the Bank of Korea show that the surplus came to $6.41 billion, up from the $3.85 billion posted in February last year. The surplus in the goods account grew thanks to exports rising for the first time in 15 months. The service account deficit shrank slightly due to an improvement in the travel and transport account. Exports in February were up 4.3% on year, while imports rose 1.5%. South Korean tech giants Samsung and LG have both beaten market expectations with their profits for the first quarter. No breakdown of the numbers yet, but Samsung seems to have had strength in its chip business, and LG may have benefited from less competition in the home appliance industry. Ji-young has more.
Samsung Electronics has reported better than expected first quarter profits amid the COVID-19 outbreak. Samsung Electronics said in its earnings guidance on Tuesday that its operating profit for the first 3 months of this year likely went up 2.7% from a year ago, slightly beating expectations. As one of the first major tech names to report earnings amid the coronavirus pandemic, the company said it expects $5.2 billion in operating profit for the first quarter of this year, up from the $5 billion it posted for the same period last year. The company expects its consolidated sales to be $45 billion, up almost 5% on year. Analysts say the company's semiconductor business might have helped the firm stay in the black during the pandemic as data centers fueled a recovery in memory chip markets, one of Samsung's main profit centers. LG Electronics also posted an earnings surprise for the first quarter of this year with figures far better than the market consensus. According to the company's guidance report, estimated operating profit came to about $893 million for the January to March period, up over 21% from the same period the year before.
LG's home appliances might have brought solid revenues, and due to Chinese TV companies' lower production, there could have been less competition for LG.
However, South Korean businesses in general are not faring so well. The combined operating profit of companies listed on the benchmark Kospi is projected to have slumped nearly 17% on year in the first quarter. Financial data provider FN Guide says the combined operating profit of 141 firms is set to be around $13.7 billion, down from $16.5 billion for the same period last year. Ji-young, Arirang News.
Time now for an in-depth look at the market news, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Well, there are signs here and there in the U.S. that the spread of COVID-19 might be slowing down, and that sent stocks soaring yesterday on Wall Street, up more than 7% across the board. What's the story in the global markets today?
Yes, as you said, U.S. stock index futures rose in early Asian trading on Tuesday as the rate of new coronavirus infection appears to slow in U.S. New York's Governor Cuomo said on Monday that the data suggested that the spread of the virus in New York is nearing its peak, following a second straight day without a large rise in new deaths. Clearly, this is really putting a good news to the market, affecting the Dow Jones surged by 7.7% yesterday. S&P 500 soared 7%. Nasdaq jumped 7.3%. Quite surprisingly, that trend is continuing. Right now, the futures market of U.S. is rising by more than 2% for S&P and Nasdaq at this point. Clearly, this has impacted positively to the Asian markets. In the beginning of today's trading, Korean market did show some corrections, but towards the end of the trading day, it rose again. Kospi was up 1.7%. Kosdaq was up 1.6%. Clearly, the futures market rising has benefited. The signals that the corona impact is probably declining, that has a positive implication for the global equity market.
Right, and as we heard just a minute ago, Samsung Electronics and LG beat market expectations with their earnings for the first quarter. And despite the coronavirus outbreaks, profits were better than they were in the first quarter last year. What do you make of Samsung's strategy to get through all this? And what was the reaction on the stock market?
I think that the corporate image for Samsung is rising quite rapidly. You already know that the retail investors are buying Samsung Electronics quite heavily. And also with this corona incident, Samsung has helped small, medium-sized companies in terms of the production related to the mask for the protection. And some of these small, mid-cap companies were increasing their production by 50% plus due to the Samsung's help in regards to the mass production. So that is putting positive implication for the sentiment and the corporate image for Samsung. As for the earnings numbers and the sales number, it is coming in much better than expected. Clearly, this is showing that quite significant demand is happening in regards to the DRAM side because of the work from home and online gaming and e-commerce are rising quite rapidly due to the coronavirus impact. Clearly, 60% plus of the operating profits come from the DRAM side. And despite all the concerns of the handsets as well as electric goods, sales numbers are going down by more than 20% plus. The DRAM strong price and also the heavy shipment increases on this is benefiting Samsung Electronics. So clearly, Korean companies in regards to the electronic goods are gaining market share, and that is definitely positive news. We think that second quarter numbers are going to be struggle because of the significant drop of the handset sales or electric goods sales because of the shutdowns and the supply chain might be having some difficulties. But nevertheless, we think that the trend of the structural change that is happening in regards to the online and e-commerce will benefit Samsung. And clearly the corporate image as well as the global market share should be rising further. And therefore, that would benefit the Kospi as well as the Korean equity market.
And briefly, Mr. Yu, Korea has posted a current account surplus in February. That's a trade figure there, and but it's too soon to say that this is a positive sign or that everything's going well, correct?
Sure. The numbers are coming in good because of the service account deficit narrowed because, Korean people are not really traveling to overseas because of the coronavirus impact. But also there's some positive news that the goods account surplus is actually rising. widening because of these exports are doing much better. Due to the coronavirus impact, the sales regarding the mask as well as the sanitizers and all these are rising quite rapidly, as well as the DRAM-related segment. So we have to watch and see how significant drop is happening in regards to other products export-related, but also how that will be covered by some of these rises from the new products. So we'll watch and see how that plays out. But in any case, one thing for sure is that Korea's GDP decline will be relatively less than the other countries because of the coronavirus impact, which will be benefiting overall for the Korea's economic growth rate as well as the equity market trend.
Very interesting. All right, let's leave it there for today, Mr. Yu. Thanks so much for sharing your insights.
Thank you very much.
That brings us to the end of this newscast. Thank you for watching. More live news coming your way at 7 p.m. Korea time.